The 10 best chart patterns explained in 10 minutes with entries. So let's get into it. First, the cup and handle. This is what a cup and handle looks like, and there's a lot going on. So let's decipher it. First, the cup and handle is found in an uptrend, and it's therefore a continuation pattern. The key to the cup and handle is how the market trades into this resistance, because each time the market pushes away from this resistance, it's coming back into the same level sooner and sooner. You can see that the distance between each high is getting shorter and shorter. This is what we call absorption. This right here is the so-called handle, and we can visualize the swings here very nicely. This is a pressure pattern, and it indicates that at this point there's a lot more buying interest than selling interest because the market is not able to pull away from this level. The breakout entry occurs when the market is closing above the resistance. Afterwards, the trend is continued into the trend direction. Second is a wedge pattern. This is generally a reversal pattern. What you see is that the market is in a mature downtrend, and the wedge pattern is here at the bottom. The key to the wedge pattern is how the lows push into the downside and to the upside. When we just look at the lows, we can see that the distance between each low is getting shorter and shorter, and also the height is getting shorter. So the market is not able to push into new lows as strong as it used to in the past. So the market is not advancing as quickly. Also, we can see more bullishness in the market as the market pushes higher much stronger than it used to during the downtrend. The breakout entry on a wedge occurs when the market is breaking out of the channel, out of the trend line, and also, very important, closing above the last high. And then you can often see a new trend emerge. So the wedge is a reversal pattern. Next is a triangle. The triangle is also generally considered a continuation pattern. It occurs in an uptrend. First, you want to see a strong bullish push, and then, very similar to the cup and handle, the market puts in a strong resistance level. And the key to this pattern is how the lows are forming. Each low is higher than the low before. If we would connect the lows, you will get something like this with a trend line, and you will see this gives you this triangle shape. The breakout entry occurs when the market is closing outside, it's making a higher low, continuing the next bullish trend wave. Here in this case, you would have even gotten a re-entry when the market retests previous resistance as support. Then you can see later on we get another triangle pattern during the next consolidation phase, and then we go over into the next impulsive wave. Next is the fake out or the trap. What you want to see is that the market is in a very strong mature trend, and then you will see a long distribution. This means that the market is not able to advance further and the trend is not being continued. However, there is a try to get out of the distribution. The market try to close above it, try to break above it, but fails. Also, what is really important is the increase in volatility. So suddenly the candles are getting much larger, whereas here you can see previously the candles are very, very small. Here the candles are very large, which points to an increase in volatility. And as we know, volatility is greatest at turning points. This is then often indication that there's a lot of buying and selling going on. The sellers are suddenly flooding into the market and the buyers are not able to advance the price higher. The breakout entry occurs with a high momentum shift candle, a huge breakout out of the pattern. At this point, we can really nicely see how the bears have taken over and the selling interest has significantly increased. Then we roll over into a new trend direction. Next is the flag continuation. The flag continuation, as the name suggests, is a trend continuing or trend following pattern. We're coming from a strong downtrend. The market was pushed down very quickly in a short amount of time. This is then our flag pattern. This is a corrective wave where we can use a channel, a trend line at the bottom, a trend line at the top to describe the flag pattern. You can see, just comparing the angles, the price was not able to rise as much during the flag. This shows weakness in the market. We can add a 50 period SMA and you will often see that pullbacks occur into the 50 SMA. It's a great pullback tool. The breakout occurs when we break below the 50 SMA and also below the trend line. Then you will see often the market roll over into the next impulsive phase. Also, there is another pattern, the triple tab, which is one of my favorite patterns. I wrote an ebook about it, which you can download for free. The link to that is in the description below. You can get it at tradeciety.com/newsletter. Also, every Thursday I'm sending out with it a new email, a private email with new trading tips that I have not shared before. The next pattern is the double top. The double top is an exhaustion pattern and it occurs as well in an uptrend. The market is coming from a strong uptrend and then it's finding resistance here at the height. The market is not able to advance further. Also, if you would add an RSI or stochastic or a MACD, you would see that this gives you a divergence right here. because the strong impulsive wave was not followed by another impulsive wave as strong, so we can see there's a lot of weakness coming in. Then after the double top, the market fails to push above it, we make a lower high, and we see that more selling is coming into the market. The breakout entry occurs when we close below the support level and make a new lower low. Then you can see the market rolls over and it finds support at this previous demand area. The next pattern is the head and shoulders. Head and shoulders can be a reversal pattern, such in this case we're coming from an uptrend, and then the head and shoulders shows us the weakness. Whereas previously the market was able to advance higher, left shoulder to the head, we make higher highs, but on the right side from the head to the right shoulder, we are now making lower highs. You can also see that the market is taking a lot of time here to move on the right shoulder, which is also an indication of weakness. Usually during a strong and healthy uptrend, you want to see that the market is advancing higher, much faster and without any problems. The greater the momentum on the breakout, the higher the chances that you're going to see a successful follow through. Here on the way down, we find another pattern that we can define with a horizontal breakout, and you could have used that for re-entry opportunities. We can also see the head and shoulders as a continuation pattern. Here you can see we're coming from a fake out, the market trades lower, then we put in the support level, we have our head and shoulders, whereas the market from the left shoulder to the head made a higher high, but from the head to the right shoulder the market made lower highs, foreshadowing a lot of weakness in the market. The breakout is then where the market rolls over into the next trend continuation. Next is the 1, 2, 3 pattern. The 1, 2, 3 pattern is also a reversal pattern, and whereas previously the trend showed you higher lows here on the left side, here after point 1 the market changed and we suddenly have a strong selling sequence. This is the strongest selling period that we've seen in all of this uptrend. This is already a first very important and major clue of market structure. We are also breaking below the last higher low, and we are making now lower lows. For the 1, 2, 3 pattern, you typically look for the first pullback, and you will then look for a pattern in the pullback at point 3. This is where you can often find very aggressive entry opportunities, as the market has already shown you that there's a high chance that we're seeing more bearishness with the strong selling sequence and breaking the market structure. So you would look for breakout patterns into the new bearish trend direction. The triple top is very similar to the double top, obviously. The only thing that is different is here that we have 3 tops instead of 2. Also, you should generally look for a triple top with a mature uptrend. The longer the trend has been going on, the higher the likelihood that we will see a good reversal. Also, when you see that a triple top is happening at a very important resistance level, such as here, this makes the pattern even better. You can also add a moving average or pivot point indicator. They are great for trend trading. When the price is closing below the pivot and below the moving average and also below the last support level, this is typically your breakout entry, and afterwards you will see a new trend emerge very often. Finally, the rounded top. The rounded top is a gradual shift in the power balance. And you can see first the market made higher highs, however this changed here gradually and the market started to make lower highs. This is a clear indication that the powers are shifting. However, the turn in the powers is much slower than the other high volatility and momentum patterns. The breakout occurs with a high momentum shift and we break through the last support. Then the market starts a new downtrend. So in this case, this is a very great accumulation pattern. And those are my 10 chart patterns. Again, if you want to get my ebook, make sure to check the link in the video description or directly go to tradeciety.com/newsletter to download it and also get a new email every Thursday with new trading tips.